Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss the levels in the Nasdaq-100 VOLQ, which of course is the Nasdaq-100 Volatility Index, and sector participation. Shawn, it's great to see you. Let's pull up your first chart here of the Nasdaq-100 with a fresh look at levels for us.
Yeah, so we were finally able to break above some of those highs we hadn't seen for quite a while. It was a pretty solid breakout today as well. So now if you're just looking at where are we at maybe in terms of just relative strength, we're still not technically into overbought, but we are approaching some of those levels. That doesn't necessarily mean things are going to turn around and completely head south, but I think this could be a good spot to consolidate, which would help establish sort of a new support level right around 13,840. If there is any sort of a pullback, I would expect something around 13,700, 13,703, maybe to be the next level below that. So right now, though, we're seeing pretty good strength. And if you're looking at uncertainty or any sort of fear out there, you're just not seeing it if you're looking at VOLQ. And so one thing that's been I think, welcomed by a lot of investors is that VOLQ is sort of broken down below some of the previous support levels where it just couldn't get down below that 20 level or so. We're actually seeing it moving lower here, and it's right at the 20 level. It's going to be interesting to see if it stays here or if we get more highs out of the NASDAQ, which could lead to it pulling back a little bit even further. But I do think it's encouraging to see that, one, we're not seeing uncertainty as measured by VOLQ moving around. So as expectations sort of start to settle for less uncertainty, less volatility, I think that can be what brings another round of investors in feeling pretty good about this. The question is, where are you going to see that come? I think you still need to see some broad participation, which we generally are getting today. If you just look at the heat map here, you've got the major components, Microsoft, Apple, some of those other big tech names moving higher. And NVIDIA had some very interesting news about coming out, and they're going to be getting into the CPU market. That might be causing a little bit of softness in some of the other semiconductor names, but that's really the only area in the Nasdaq-100 that's really showing any sort of weakness today. But I think investors, by and large, are happy to see some of these big mega cap companies resuming that rally, because they were sort of lagging behind the overall market, and they've certainly shot higher here in the past week or so. And I think that's what's really pulling the NASDAQ up to new all-time highs. So right now, I think a lot of investors would like to just see some consolidation here would be pretty welcome, because that maybe would show that this is a sustainable price level that we can now use as a base moving forward to continue a march higher off of.
Yeah, especially as we're going into earnings this week with the banks and money centers kicking it off. Shawn, we also have an individual name to take a look at today.
Yeah, so looking at the 10-year Treasury yield, I thought it was interesting. Everyone was expecting sort of a hot report coming in on the inflation front, and the expectation was that was probably going to maybe be what caused Treasuries to move higher. I think that was offset, however, I'm sorry, Treasury yields to move higher. I think that was offset by the news that Johnson & Johnson is having to temporarily suspend their vaccine. I don't think it's expected to be majorly problematic or affect the rollout of the other vaccines and getting more people vaccinated at large. The administration has come out and said they feel they're still on pace for their timeline. We'll want to see how long this lasts, but I think right now they're just being a little bit of an overabundance of caution, just taking a look at this. But right now, it's less than 1 in a million is something that Dr. Fauci came out and highlighted. But I think that sort of offset maybe the hot inflation report we got today, and that was, it caused maybe a little bit of a flow into some of those safe haven assets like Treasuries, at least for the time being, while investors assess this. I imagine if we do get the all clear on this, I would expect to see rates moving higher, and also you could get more Fed speak out. We got a lot of Fed speak coming this week, got a lot more data to come. So I think there's still a lot of activity on the Treasury and on the interest rate front to keep your eye on for the rest of the week.
Yeah, if I understand the J&J situation correctly, it's 6 out of 6.8 million inoculations, which is, I think, 0.00008, which I don't even think is high enough to be considered random. So I think as that works through the system, I think also, Shawn, that the bigger issue is plateauing at a certain point where if they're looking for 70% to get to herd immunity, I believe the number that they're looking at now is 59%. It's a matter of getting people to want to take the shots. That's really key here.
Yeah, I mean, I can tell you I'm trying to get one myself, and I check every day, and almost as fast as you can get more appointments popping up, they're getting taken up almost immediately. So I think that's a good sign that there is demand, and if we don't have unused vaccines sitting out there, people are getting the vaccines almost as fast as they get them. At least that's the experience here in Chicago.
Well, that's a good thing, Shawn. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.